Hello, everybody. This is Just Luck Trades, and we are on the final episode of Fundamentals of Trading. If you've not watched the previous videos from hash 1 to hash 4, please, the link is in the description below. Click on it, watch them before you come here because everything is traded together. And I would like you to like, share, and subscribe to this channel as it helps our algorithm. Without further ado, let's continue. So today we're going to be dealing with types of market analysis. Analyzing the market simply helps you to take your trade. That's what it means. You want to check what has happened in the past. Some people listen to news. Some people trade on what others are trading. They trade the opposite. There are so many ways to trade forex. And I'm going to expose you to all of them and then narrow down to what we do in Just Luck Trades. There are three types of market analysis. There is technical, there is fundamental, and there is sentimental. Technical analysis just deals with the history of what has happened in the past in the market and using it to predict where the market will go in the future. You can do this using your indicators, you can do this using your tools like your trend lines, your support and resistance. All these topics will be dealt with when we come to technical analysis proper. Then for fundamental analysis, there are people that have specialized in understanding economics, understanding supply and demand, understanding what the news, social policies can do to a currency. For example, if there is war, like there is war in Ukraine, I know that their currency will be going down. The value will be going down. Nobody would want to invest in Ukraine right now because it's in turmoil. And my heart goes to Ukraine. I hope that by the grace of God, the war there will stop. But for the purpose of illustration, I hope you understand what I mean. Like, for example, in monetary policies, like increase in interest rate, for example, would attract investors to a country. That means that their currency will become stronger. For example, if Nigeria's interest rate is 5%, everybody will want to invest in Nigeria because 5% is a big deal when it comes to money. And that means Nigeria's economy will grow. So it's just taking into consideration a lot of factors that will affect the economy of a country and using it to make your trade. Like I told you, anybody that says that trading is a scam does not really understand. Is not the person was not informed properly. So the next is sentiment. It's what traders do in the trading platforms. I don't really understand how this is used in trading, to be honest, because in Just Luck Trades we measure on technical analysis. We don't even trade the news, like the fundamental analysis. We don't use it because we believe that anything that happens in the news, anything that happens with sentiments, you still see it in your chart. So it's your ability to know what happened in the past and use it to make informed decision in the present. That's what we do. And as we go along, you see reasons why we do that. So a typical forex chart looks like this, and all you see here is called candlesticks. From this is called the wick. In the future class, in this slide, you see the anatomy of candlesticks. So this has a lot to do with prices, what the price is doing. By the time we enter into technical analysis, you get to understand what all these things means and how you can take advantage of it when it's happening in the market. So in your trading platform, you have something that looks like this, just like the way you have this here. This is your price and this is the date or the time. So this is illustrated here. When you have your marketplace, when you have your charts, this is the price and this is the date or time, depending on the time frames. When we go into time frame explanation, you get to understand, but for the purpose of this foundation class, just understand that when you see a chart, what you see by your right hand side is the price of the pair, whether it is going up or is coming down. So for example, if the price went to this place, for example, when you merge it with the price there, that will be the price. And then you find out the date it happened down here. So as the price is here right now, if you merge it with the price that is on this price line, you see the price. And then down this way, you see the date, you see the time, you see everything about it. So that's what your typical trading platform looks like. Just the same diagram that I from my previous slide. So if the price is going up, you see it there. If it's coming down, you see it there. So that's what chart and price action looks like. In details, it's not as simple as it is, but for the purpose of understanding, just this is what it is. So the chart shows you what the price of the currency is, because we trade in pairs. So what the price is, whether it's going up or it's coming down, and then it shows you the opening price, the closing price, and the historical price as well. So in chart representation, there are three major representations of chart, although there are a lot of others, but these are the three major chart representations. We have the candlestick charts, the bar charts, and the line charts. So I want to show you what it looks like. So this is your candlestick chart, just like the previous charts that I've shown you. This is the bar chart and this is the line chart. So many traders use these for different purposes, but in Chesslock trades, all you need is the candlestick chart. Although when you progress in knowledge, you can use any other thing, because in Chesslock trades, we don't really aim to configure you to a particular trading method. Although we would give you a trading method at the end of the whole session, but the knowledge you get from Chesslock trades, you can refine yourself and become a better trader, because what we have is unique. It will give you a compound knowledge of the market that you can actually choose a strategy, build a strategy, and you can even sell that strategy, to be honest, if you want. What you're learning here is learned through the sacrifice of time and money, and it's the top 1% that has this knowledge, but it is made simple here. Please don't trivialize it. Take your time, especially now that we are entering into the technical analysis, which is the meat of trading. Take your time and learn. So this is what your chart patterns look like. So we are entering into more intricate details now. So now that I've shown you that this is what your chart looks like, we want to let you know that the individual candles always tell a story. And these stories will start as we enter into technical analysis. Everything I've taught from hash 1 to hash 4, we are just playing. I want to let you know that our videos will start becoming longer, because if you watch, I try to keep the other videos within 10 minutes, maybe 15 minutes. I don't know how long, but I didn't go beyond 15 minutes. This is not to bore beginners mostly, but let me let you know that when I was learning how to trade, I was watching 2-hour videos. So now that you've come out from the beginner's level, because if you go through my video, you should be able to understand what it means to trade forex, just a bit of understanding of what trading is. That means you have graduated from an amateur to a beginner, especially for people that, because you have to come from amateur, beginner, then intermediate. Then when we are done with technical analysis, we would have grown in knowledge now, because when you start trading, it's a different ball game. So you have to be patient enough to watch videos that are longer than usual. You have to learn how to watch videos that are at least 10 minutes, 20 minutes, 30 minutes. This is how you learn, because the knowledge has to be progressive. So let's go into this. So I want to show you the anatomy of one candle. I want to go back again, especially for beginners. All these things you see that is happening here, one candle at a time. One candle forms at a time. Like for example, let me use this plain side. This candle will finish forming before this one forms. And you see that all the candles take on different shapes. You see this candle that just is looking like very slim and there's small green here. It means something. We'll still explain all those things, but I just want to let you know that candles take on different shapes and they form one at a time. So we want to explain to you the anatomy of just one candle. So one candle, remember that the green candles, according to this, whenever you see the green candles, although the color does not matter, but universally people use green and red candles. So the green candles always shows that the market is going up. It is called bullish candle. Bull means going up. Then bear means going down. But when we enter into technical analysis, we will have to change those mindsets. We don't use blue, we don't use green or red. You can use any color. It does not really matter. What matters is how strong your technical analysis is. So when you see a bullish candle, it tells a story. Now, this you see here that is full green, and then you see here full red. It is called the body of the candle. So I'm talking about the bull candle and the bear candle together. They have most things in common, but they differ in only two things, which is the open and the close price. So let's start with what they have in common and then move on to what they don't have in common. So they have the bodies in common. Then anytime you see a place like this, it's called a wick. Let me go back. I like being practical. So this is called a wick. So you see this candle now, this candle that formed here, but there is a small wick on the top. See this candle that formed here, a wick, then it has the body is small. See this candle here, it has a wick here and the body is red here. So I just want to be practical so that you don't get thrown away. So just forgive my video. My video is aimed to make you understand, not really to be professional or anything. It's made to so that you can understand what is being taught. So this is the body of the candle. So anytime you see any of these wicks, this is called the wick, where the body did not cover. It's called the wick. If you see it at the top, if you see it at the bottom, it's called the wick. Then every bullish candle and every bearish candle has an opening price. So remember that the bullish candle is when it's moving up. Let me go back again. It's when it is moving up. You see, this is moving up. This is one bullish candle, the second bullish candle, the third bullish candle. When we go into technical analysis, we will tell you the reason why it is the color that it is. So don't worry about that. Just all you need to know is that when it is going bullish, it is increasing in price. But when it's going bearish, see red, is decreasing in price. So in that bullish candle, it starts with an opening price. It opens below and closes above. That is all you need to understand. Bullish candles open below and closes above, while bearish candles open above and close below. Because it's just normal to think of it that way, because anything that wants to go high will start from low and go high, or anything that wants to come down will start from high and go low. So just know that bullish candles open below and close above, while bearish candles open above and close below. So I don't want to go further anymore. I want you to digest this slide, because the next video we will start with technical things, very, very technical things. I want you to get ready to learn, unlearn, and relearn what you know about forex, because I know that my intermediate traders, advanced traders will now be interested in what I'm saying. Before, they might be swiping the videos, they know it, they've read it a lot. But what we are entering into now will be more technical, and we are going to, after a bit of technical analysis, we'll go to the chart interface. We're going to do a lot. So I want to commend you. This is the longest video I've done, and more to come. Please take your time, watch these videos. Especially, I'm so concerned about beginners here, because I want them to have solid foundation before we enter into the technical part of this trading. So don't forget to follow us on all social media: Facebook, Instagram, TikTok, and Twitter. Like, share, and subscribe. If you've not watched other videos, it's on the link below. Thank you so much for your patience. I really appreciate. See you some other time. Take care.